Hello, I'm Kimberley Dondo, Digital Content Manager, and welcome to In Conversation With, the podcast series that delves into the world of financial services and brings you face to face with some of the most notable figures in the industry. Listen as we discuss topics that are currently facing the industry and hear from visionary CEOs to disruptive innovators as we bring you a diverse array of voices and perspectives. We'll explore the challenges they faced, the lessons they've learned, and the insights they have to share about the ever-evolving landscape of financial services. Hello and welcome to In Conversation With. I'm Kimberley Dondo, Digital Content Manager, and in this week's episode, I'm joined by Will Fraser-Allen, Managing Partner at Albion Capital. Thank you for joining me today, Will.
It's fantastic to be with you today. I'm really looking forward to the conversation.
So before we dive into the conversation, could you give us a bit of background into yourself and your journey into venture capital sector and how that's shaped your experiences and your approach to investing?
Absolutely. So venture capital's really been a huge part of my life for really quite a long time. So I originally joined a venture capital business in 2001, and that business is now Albion Capital. So I've been investing in venture for the best part of quarter of a century, and that's been a really interesting time to be involved in venture because it's seen an industry mature around me. It's gone from being really not that many of us doing it all those years ago to now being a thriving industry. And if I sort of narrow that down to VCTs, which is obviously a subsector of VC, it's an industry that's grown to something like 6.2 billion of assets under management. So it's really matured. The asset class has become better known generally, but VCTs as an investment product have also matured and arguably becoming more relevant to more and more of the clients that your listeners will have. So it's been an interesting journey, and in that time, I think the way we approach venture has changed. It's become professionalized, and the returns have become more understood.
Right. And as you mentioned, you're clearly a long-standing figure. Quarter of a century is a is a good amount of time. So what key changes have you witnessed in the VCT market over the years, and what lessons stand out for you?
Yeah, I think this is really speaking to my earlier point that it's been an industry that's matured over that time and has grown. I mean, it was obviously you start from a very small base when in 1995 when VCTs were first announced, and the first VCs were actually launched in 1996. It was a really quite small industry. In terms of what VCTs were designed to do, they were designed to provide funding to small businesses in the UK. They were always, the objective was always to support innovative companies, but very specifically fast-growing businesses, and making those businesses grow faster by providing the financial support and other support they needed to grow faster. And I guess that's where the industry has moved over time because what we've been asked to invest in, and ultimately there are rules around how VCTs invest, which are set by Treasury, and that's, if you like, in return for the tax incentives that our investors get. There's been an increasing focus of VCTs into more innovation and more growth. And what that means, as I'll come on to talk about, is it means that many VCTs now are focused on technology, healthcare, areas of the economy which are potentially both very exciting but potentially fast growing. And then I guess the other bit is you've just seen more people doing it. I mean, there are now a considerable number of managers, and the number of people in venture has increased. And I would argue that as a result of that, you've got a much deeper expertise amongst those investors.
Right. And looking ahead, we are now in 2025. So what is your assessment of the VCT market in this year? And are there any specific sectors or trends you're particularly optimistic about?
Absolutely. So I think the great thing about VCTs is that they are investment companies, so they are what's known as permanent capital. So they're very similar to investment trusts, except they come with a tax incentive. So where as we go into 2025, we have a pot of potential investment money. So that's the sort of 6.2 billion I talked about. And then each year the industry raises money. So I guess as I think about 2025, I'm thinking about two things. One, how will that pot of money expand through the fundraisings that are going on at the moment? And at the moment, we're broadly there or thereabouts with last year. But I'm also thinking about what are the investment opportunities for VCTs? Where will they deploy their money? And an important point to make is that different investment managers will have different approaches and will favor certain sectors and types of companies, but they're all operating under this requirement and this desire to invest in innovation and growth. So if I answer the question specifically around what we at Albion do, the sorts of areas that we're excited about and where we are deploying our money is in areas that are business facing. So B2B being the key theme of what we do, and that is in software. So B2B software is a big area for us.
Yeah.
Within B2B software, we particularly are interested in areas like fintech. So software that makes financial services more effective and introducing new business models. We like digital security particularly, and that's everything. That's not just cyber, which is probably what digital security conjures up in most people's minds. It's broader than that. It's the whole security of data generally. And then looking elsewhere, we're fascinated by how data is being used and analysed, and across all of those three areas, we've got this big overlay, which is really exciting, and it will be familiar to everybody. But you've got this AI revolution going on around us, and whilst our investments won't be in the sort of core AI technology, it'll all be around how AI can be applied to the businesses within our portfolio. And that's really exciting. And potentially, I think that's why 2025 will be interesting. There's a wave of change happening, and we're well positioned to be part of it. And then the other area that we're excited by is healthcare. We at Albion have been investing in healthcare for a very long time, and very much on that theme, we're interested in health tech. So how can technology make healthcare more effective, and very specifically more efficient? I mean, all healthcare systems around the world have a real issue about capacity and the need for healthcare services. So clearly a solution to that is to use technology to make healthcare more efficient and more effective. So those are the two really big themes that we're looking at currently at Albion.
I wonder if macroeconomic factors, such as inflation and interest rate fluctuations, have any influence on VCT markets and the trajectory for this year.
Yeah, that's really it's an important point to think about. I'm going to sort of answer that in a general way, but then focus more specifically on what's happening around us. I mean, generally the benefits of investing in venture, particularly technology focused venture like we do, is there are different cycles you're investing in. We are backing technology cycles rather than economic cycles. That's not to say we're not immune to economics, but actually what we are backing is those big new technologies coming through, and we've just talked about AI as an example, but software generally is a big theme. So to a certain extent, we're more worried about the opportunity that emerging technologies offer. That said, it would be wrong to suggest that we're completely oblivious to the broader world around us. And you're absolutely right. I mean, it's a complicated world out there at the moment. It's and that's not only in the UK, but that's globally. You mentioned inflation. Fortunately, I think inflation is not quite where it was 18 months, 2 years ago. But clearly, there's the risk for further inflation, particularly in the UK. The current approach of government is potentially inflationary through increased national insurance, therefore cost of labour, that being passed through to the consumer. So we do need to keep a weather eye on how that will affect the broader world in terms of our own portfolio companies. Clearly we are hit by national insurance increases, but not perhaps to the extent that businesses are, which tend to employ lots of lower paid people. We tend to be investing highly skilled software developers, healthcare professionals. So the relative impact as a percentage impact is less, but it's not completely removed. So we'll see how that plays out. Interest rates are high. I mean, the gilt rates in particular have gone up. That does have an impact on technology valuations, and it has an impact on appetite for risk. That said, I do think it's really important when people think about venture capital and venture capital trust specifically, these are long-term products. We shouldn't be reacting to short-term macroeconomic issues. We should be thinking about 10-year plays here. So just to remind your listeners, if you invest in VCTs, you have to hold them for at least 5 years, in return for which you get 30% upfront tax relief, and you get all your dividends tax free. So these are attractive tax incentives. But one of the key reasons why you get that is that they should be seen as a long-term investment. You have to hold them for 5 years. Really, you should be thinking about holding them for longer. For example, the average time we tend to hold an investment is about 8 years. So if you're looking on that sort of time frame, to a certain extent, you can think about the macroeconomic cycle over a longer period of time and be less reactive to what one budget might say to another.
Yeah, I think that goes back to your sentiments earlier about VCTs just maturing. You also have to allow your investment to mature, the businesses that you're investing in to also mature. So you need to see that through. And I think that makes sense. So for our audience of advisors looking to diversify their client portfolios, what opportunities within VCTs do you think are particularly compelling in 2025?
Yeah, so if I look at VCTs as the product itself, it is, as we've talked about, it is exposure to venture capital, and it's really important to see VCTs in that context. We run our businesses as venture capitalists. We are doing proper venture. And people need to understand that. So I would argue there's two ways to look at that question: is venture capital as an asset class an attractive one to be there? I would say, but clearly venture is exciting. You can back outlier companies, and as a result, you can deliver exceptional returns. If you back that next big thing, that can make a very substantial difference. So what venture does is it does offer outsized returns where one is successful, but with that comes potential for volatility and a level of risk. But that, if you like, is the balance for the potential returns. So why venture capital? I think venture capital, for the reasons we've talked about, it's you're backing those technology cycles, and technology is where very significant companies have been built over time. And the opportunity in the UK, I would argue, is very strong, because we have some of the finest universities in the country. So there's some very good talent coming out of those universities. We have a attitude towards being an entrepreneur, which has become increasingly positive over time. And just picking up another theme over my time in venture is, really encouragingly, being an entrepreneur has become a good thing to do. It is cool to be in a startup, to build something. So that's where the UK, I think, has done very well. And I would encourage the government to continue encouraging entrepreneurship through things like venture capital trusts, which can provide that funding. So venture is an interesting diversification to more traditional investments, quoted equities and the like. And I think VCTs are in a way a win-win, because not only are you getting exposure to a venture capital portfolio, but you're also being incentivized to do so by some very helpful tax relief that comes alongside them.
Right. And obviously, like with anything, there are challenges that you might face. So, what challenges do you foresee in this market for this year, and how do industry players adapt to them?
I think that we've picked on one challenge, which is we don't know how the world is going to play out.
Yeah.
But in a way, that's venture capital is trying to predict how the world moves and what's going to be the next big thing. So, you talked about inflation. Where's inflation going to go? We've got all those bits. I think some of the things that we need to be comfortable with is that we will continue to attract great talent into technology businesses in the UK. So making sure that the environment generally continues to encourage people to become technologists, to become entrepreneurs. I think there is a piece around making sure that we can still access talent from overseas. So I think to the extent that some of the innovation visa schemes can be improved, I think that's a great thing, because the one thing that would make our life more difficult is a lack of access to that talent. Because ultimately,
Mm.
what are we here to do? We're here to back those exceptional entrepreneurs to build something really, really quite special. In terms of access to fundraising, I think that's important. If you look at the VC sector generally, they're raising money, and that and I'm talking about at the fund level, the VC fund level, has been quite challenging. It rose to some very big numbers were raised shortly during the pandemic, the 2021, 2022. There has been a contraction generally. But I think the encouraging thing about VCTs, and why I think government is absolutely right to support it, is that we, to a certain extent, have been able to continue to raise money, despite some challenging times around us. Fundraising was around was last year was around the sort of just under 900 million, but which was down a bit from the previous year. But that's still a substantial amount of new capital coming into the UK. So I guess it's access to talent, access to further funding, and building and working with a broader environment that is pro growth, to enable our entrepreneurs to thrive.
Right. And you just mentioned how fundraising has been under pressure. So, what is your view on the current fundraising landscape for VCTs, and how might this evolve this year?
Yeah, yeah. I don't think I'd go. I don't think I'd go to under pressure. I mean,
Hmm.
I think there was a period of time alongside the VC market generally where the amount raised sort of went to about 1.1 billion. I think that was in line with a broader um, uh, fundraising environment, which was very positive, but was somewhat influenced by the world that we lived in during and after immediately after the pandemic. I think what's happened since then is the level of funding is more normalized relative to the opportunity. So that sort of 880 million last year, I think, was a respectable, sensible amount. The latest numbers I've seen on fundraising this year, and bear in mind we are still relatively early in the fundraising
Hmm.
season, suggests that we're tracking that number again this year. But I do just add that caveat that we are only in January, and the busiest period for fundraising, as you would expect, is in the run up to the end of the tax year, so the next two and a half months. But I think if you were going to push me for where I think we'll end up, I'm cautiously optimistic that we will be able to raise a similar amount to last year, which in itself I think is a good sum of money for what we are trying to achieve.
Yeah. And when it comes to having conversations with potential investors, how do you approach those conversations in periods where economic certainty is not there?
I think there's a number of points which sort of just adding to the points I made earlier. I think firstly you need to look long term. So if one wants to go into venture, if we really shouldn't be sort of looking at the immediate effect of a single budget, for example. So
Yeah.
I would encourage potential investors to think about venture as a 10-year play. Um, I'd also make the point that VCTs have an interesting opportunity, are an interesting opportunity, because you are typically investing into an existing portfolio of investments, so that you're not just investing as of now, you're buying into investments that have been made over the previous decade. So to a certain
Hmm.
extent, you are buying immediate diversification across maturities, we call it, so across different years. So you're not completely exposed to what investments you may make now. But I think I've talked more generally about what happens in a recession. And I think there's lots of evidence that as you come out of recession, that has historically been a very good time to be in venture capital. And you might say, well, why is that? Well, it's a number of reasons. One, when you see companies downsizing, that usually means some very good people end up thinking about what they'd like to do next. So you see some very good entrepreneurs coming out of large corporates in particular, keen to do their own thing. So I think it's positive in terms of encouraging, creating potential founders. And then I think the other point is going back to my earlier comment, you are backing technology cycles. So let's be more focused on, is there a technology theme to back here? And we've talked about the opportunity of AI as being one of them. So yes, clearly, I'm not going to say that the economy is in a particularly easy place now, but that doesn't
Hmm.
necessarily mean that it won't be a good time to invest in venture. And in fact, history tells you it could be a very good time.
Yeah. And you've talked about the diverse sectors that you have backed, from fintech to healthcare and healthcare tech. So I wonder if there are any lessons or strategies from those investments that you have learned, that financial advisors can also learn to impart when advising their clients.
So I suppose one way you could look at it is you could say, well, what is it that makes successful investments in venture? Well, when I think about it, we're now been have backed something like 200 businesses over our history, and we've had over 100 profitable exits, and have a portfolio now of some 60 odd businesses. So we've seen lots of businesses, lots of entrepreneurs. I think first thing as an investor, one needs to be humble. One needs to recognize that the people that make the success is the founders that we back. So it's all about the quality of the founders. You need to find people that have got vision. They've
Hmm.
got to be resilient. They've got to be ambitious, but they too need to be humble enough to listen to those around them. And to the extent that we can impart some of the experience that we've seen and some of the lessons that we've learned, um, we can help. But I need to be very clear that ultimately the entrepreneurs themselves are those that are going to really create the value. So good entrepreneurs. In terms of technologies, it's about having the expertise within a VC or VCT business to really understand what we do. We have to make calls about technologies when they're very nascent. Therefore, the way that we do that is that we recognize that being a investor is increasingly specialist, and make sure that on the team we have specialists that can do that. So on the healthcare side, we have three ex doctors who went on to be healthcare consultants, to make sure that we've got that depth of understanding of the healthcare system and the potential benefits of health technologies within the business.
Hmm.
We on software, we've got people within the team who've been involved in software businesses. We've got people who just understand and thrive in backing things, but being very clear that we need to form our own views. We can't just ring up a broker and ask for a piece of research on a new technology. We've got to go and dig into it, work out the opportunity, have the courage of our convictions, and then make sure we back great people to do it. But then make sure that we provide what support we can to help them grow faster. And
Yeah.
for example, we have people within our team. We call them the the portfolio platform team, who are
Hmm.
who have backgrounds in talent acquisition, good hiring strategies, in go-to-market strategies, i.e., sales and marketing. So we can help provide the tools for those entrepreneurs to thrive, whilst recognizing that ultimately it's the quality of the entrepreneur that will bring the success and the creation of value.
And how do you see the role of organizations like the AIC, BVCA, and the Venture Capital Trust Association shaping the industry's future?
Um, so those three organisations ultimately are, for the benefit of your listeners, they are the trade associations that look after sort of venture capital as an asset class in the BVCA. The AIC represents the venture capital trusts themselves, so the
Hmm.
underlying vehicles in which we invest. And then the Venture Capital Trust Association is representing the investment managers, so the people like Albion, and the absolute all three of them work together extremely well. Um, in doing what is really important, and that is firstly promoting the importance of venture capital to the UK economy. That innovation, that creation of highly skilled, highly paid jobs, the fact that we can be an important part of the solution to growth in the UK. Um, the next area that they work on that's really important is making sure that there is an open and great dialogue with government, and specifically Treasury, who are involved in working with us in terms of supporting them through the tax reliefs we're given, but also allowing us to provide the evidence and the data to Treasury to show just the impact that we have. So those three organisations are sort of critical in terms of representing the successes that we have. And then the second part is that they can work from a lobbying perspective to help make sure that the VCT scheme is as effective as it can be. And I mentioned earlier that we operate under a number of rules, which you would expect. So we're able to, through those organisations, to have very constructive conversations with Treasury about how the rules can be improved to make the scheme more efficient. Great example for those that may have heard, the VCT scheme came up to what's known as a sunset clause, which was
Hmm.
basically last year, which said that the scheme had a 10-year period and needed to be reviewed and renewed for a further 10 years. So those three organisations were very instrumental in having that discussion with government about extending the scheme. And we were absolutely delighted that happened last year, that the scheme was extended until 2035. So really good news and a great endorsement from government, and a recognition by government the VCTs provide an important part of that, the tools to create growth in the UK.
Right. And lastly, what advice would you offer to financial advisors looking to stay ahead in 2025 as they navigate the ever-changing investment landscape?
Well, I go to work on assumption that's specifically around VCTs, because otherwise that's a very big question. Look, I think it's just really important to look at venture as it is, to understand that it's long term, to understand that it's that you can't take a view on success over a short time frame. So be patient investors, recognize the opportunity to back real value creation when you're looking at where to invest, i.e., which particular VCTs to invest in. Think about the team, the team that you're backing, about the skill sets within that team. Do they have that specialist skills that I've talked about? Do they have the scale to be able to support the portfolio companies after investing through the various advice like talent creation, and then look at what are their track records, what in not only in terms of absolute returns, but in terms of have they backed some businesses that have gone on to be exciting. And I'm going to give a little bit of a plug here for Albion. An example of a great exit came our way last year, which was a business called Egress. It was one of the top three companies in our portfolio.
Mhm.
We backed it a decade ago. It was very much in the digital security area that I talked about as one of our themes. Specifically, Egress is about email encryption and
Yeah.
secure data exchange. Some of your listeners may have come across it. The NHS use it, Bupa use it, and that was a great business. It was doing probably about 1 million revenue, 20 odd people when we backed it. It was a very substantial business selling across in the US and the UK. When we started, it sold for hundreds of millions of dollars. The Albion funds made 7.2 times return, which is a pretty decent return. But importantly, it also delivered over £60 million worth of proceeds back to the Albion VCTs. And to put that into context, that's as much as we raised in entirety in the fundraising season last year. So a single investment, when it goes well, can make a very substantial difference. And it's about getting those outliers is how you achieve top quartile performance. So to your question, I think it's important to see evidence that the manager you're looking to back is able to spot those outliers, because it's those outliers that will make the difference in terms of returns.
We also use Egress over here, so I actually know that. I actually do know that company. But yeah, that's great. Thank you so much for speaking with me today, Will.
Kimberley, it's been a real pleasure. Hopefully your listeners have found that useful. Just a little bit final plug for Albion. We are in the middle of fundraising. We do have an offer out at the moment. So if anyone that would be keen to hear more about what we're doing at Albion, we'd be delighted to talk to you more.
Yeah, no, definitely. Sounds like a great opportunity. Thank you once again, Will.
Thanks, Kimberley.
Thank you for listening to In Conversation With. We do hope that you enjoyed it. Please do keep up to date with all our new releases via Podbean, Apple Podcasts, Spotify, and everywhere else you get your podcasts from. You can also keep up to date with all our new content published on the Money Marketing website, as well as our print edition Money Marketing magazine. So make sure to subscribe. Follow us on Twitter, LinkedIn, Facebook, and Instagram. See you next time.